Hello, this is Jennifer Frimmel from One EDI Source, and I'd like to welcome you to today's presentation, Chargebacks and Deductions Robbing Your Revenue. Our presenter today is Chris Manchin, our CIO at One EDI Source. Just a reminder that everyone has been muted, and this is being recorded and will be sent to you after the webinar. With no further ado, I'd like to introduce Chris Manchin.
Hello, everyone, and welcome to the webinar. My name's Chris Manchin, and I'll be taking you through this presentation. Just a little bit about myself. I've been working in the EDI industry for 20 years. The first 10 years of my career, I was working for a small CPG supplier to the retail industry. And actually, my first job was to automate the Walmart orders that the company was receiving. They were printed out on a big line printer, and I had to figure out how to get them into our accounting system in an automated way. Currently, I'm the CIO of One EDI Source, and I get to work with a bunch of folks on our newest product that helps people work with chargebacks and deductions. So today's agenda, we're going to go through our view on operational excellence. Then we're going to talk about some common chargebacks and deductions and give you some real-life examples of things that have happened to our clients and even things that have happened to me personally. Next, we'll go through a chargeback and deduction reality check that you can use to determine kind of how your business views chargebacks and deductions. And then we'll go through some practical ways you can find some lost dollars and how we can get started. So our view on operational excellence follows the curve you see now. And basically, every company is somewhere along this curve. From the very beginning, when the first time you get an EDI trading partner and they ask you to connect, you might do that the way we did at my old job, where we simply printed the orders and then manually keyed them into our ERP system. Or more recently, many companies choose a web-based turnaround method of EDI communication. But at some point, you know, volume begins to build and you decide that you need to automate the flow of EDI transactions into your back-end accounting system. And at that point, you know, you start saving, you start realizing the savings that happen when you automate EDI. But very quickly, you realize that not all EDI is exactly the same, and you need to validate what's going in and out of your accounting system. And that might be simple validations like purchase order price comparisons or ship to location lookups to ensure that your accounting system is up to date. But most companies get about this step and we see it stall out. And One EDI Source really believes that EDI can be a competitive advantage, and the companies that go further tend to really realize some major advantages over companies that kind of stall out at the validation stage. So what do we mean by that? Well, companies that begin to collaborate about the transactions that are flowing between and the issues that are coming up start to realize that they can add additional validations, they can move down here, that really enhance the business. So things that we did previously were things like, if we ship UPS, we want to ensure that we always provide a UPS tracking number to our customers. So we actually added additional validations to ensure that that happened. And we just kept doing that and doing that over and over, collaborating with the team, figuring out what problems we were seeing, and then adding new validations that we never thought of when we originally connected. And at that point, you know, you begin to transform your operation. You begin to make decisions based on managed by exception, so that you can make better decisions and make the efficiency of your supply chain grow. And I really want everyone to think about EDI as business milestones. So, you know, when you have a sales team, their goal is to work with buyers and figure out, negotiate and figure out how to get an order. Once they get that order, they send it over to customer service, and customer service is responsible to figure out how to make sure your accounting system and the buyer's system stays in sync. So things like item prices, shipping locations, all of that stuff. So there's a lot of work that's involved there. Once the order gets put into the accounting system, then fulfillment needs to pick it, pack it, and ship it. And so a lot of steps have to happen here. Finally, once we've shipped the order, accounting needs to generate an invoice and send it on its way, and then make sure it gets paid. So all of these steps have a milestone: the purchase order, the advance ship notice, and the invoice. So as you can imagine, businesses are dynamic, and processes and people and procedures are changing every single day. You know, a new customer service agent might be put in place, and if you don't have validations in your EDI to make sure that everyone's doing the process the way it's supposed to be done, things can quickly get out of sync. Likewise, if your shipping team gets a new warehouse management software, how do you know that the ASNs coming out from the old system are the same as the ASNs coming out from the new system, unless you're validating? And it goes on and on through the accounting team as well. So what is the result of all these problems that are happening in the retail industry? Well, based on a study from Attain Consulting Group, Customer Deductions 2015 benchmark study, they found that companies could be losing 2% of revenue year after year from deductions and chargebacks. So you can imagine, if you're a $100 million business, you might be losing $2 million worth of revenue because of fines, deductions, and chargebacks. And what are these chargebacks? Well, the list is extensive, but here's just a few that are pretty common. Things like missing ASNs, pricing issues, invalid UPCs, you know, missing a shipment, and it goes on and on and on. And unless you're validating these things, you could be losing, obviously, significant revenue. So now I want to give you some real-life examples of issues that happen to some of the clients of One EDI Source, as well as myself personally. And they're pretty interesting stories. So the first one is shipping charges. And so this particular client of ours had a problem. They had negotiated with a retailer that anytime they shipped UPS or FedEx, the retailer would pick up the cost of that shipment. Now, they didn't ship all of their orders via UPS and FedEx, but it was a significant portion that would go out that way. What they found was they forgot to include the shipping charge at the bottom of the invoice. And so if an invoice was $100 and the shipping charge was $25, they told the retailer to pay $100 for the goods. They forgot to put the freight charge in there, but at the bottom of the invoice it said pay $125. Well, the retailer's system was designed to check invoices and make sure that they were accurate, and it saw the detail about paying for the goods at $100, and since it was missing the freight charge, they simply just paid $100. They ignored the total at the bottom of the invoice. And this went undetected at the supplier for many years because the supplier had put in place something called a deduction threshold. They told their accounting team that if something was, if there was a deduction on an invoice that was less than $75, it wasn't worth the time for the supplier to research the issue. So they would simply write that money off. And so the accounting team did exactly what they were told. They continuously just kept writing off, writing off, writing off, and it took One EDI Source analyzing their invoices to actually find the issue. And once we found the issue and we had them update their map on the back-end system, the problem was quickly corrected. The retailer immediately began paying the full amount. So at the end of the day, what did this one change save the retailer? It was $25,000 in unnecessary deductions, just because of a simple issue of not sending the proper charges on the EDI invoice. And the interesting thing about this one was the paper invoice was accurate, but the EDI invoice was not. So it's a big check that we go through here at One EDI Source to make sure that everything represented on a paper invoice is represented on the electronic invoice. Our next case story is missing prices. So again, this is a client of One EDI Source, and it was a very exciting time for this client. They had recently won new business at a major retailer, so they got many new items into this particular retailer. So the day came where the customer sent the new orders in for all their distribution centers around the country, and customer service, all the orders had bombed out because of the new items that weren't completely set up in their system. So they were under pressure to get those orders in quickly. The shipping team wanted to see them as fast as possible because they knew they were large orders and they had to get them out the door quickly. So customer service was rushed, and they mistakenly forgot to enter the pricing for roughly half the items. And so when they pushed the orders over to shipping, half the items said $0 as the cost. Nobody detected the problem. The shipping department did their job. They filled the orders and they shipped them out on time. But suddenly, and the accounting team who generated the invoice didn't notice the problem because some of the items actually had pricing. So the invoices looked normal in their accounting system. So the retailer received the EDI invoices, and they did exactly what was asked of them. They paid for the items that had prices associated with them, but they paid nothing for all the items that came in at zero price. So again, we were only able to detect this issue when we did a simple validation. We began validating the purchase order price to the invoice price. And when we found these invoices, the supplier was shocked. And at the end of the day, this one problem almost cost the supplier $90,000. But they were luckily able to go back to the retailer and resubmit a new invoice, and the retailer paid the invoice in full. Our next story is missing discounts. So this client offered a 5% advertising discount to a large retailer to promote their products. And when the orders came in, customer service didn't know how to process them. They had never added a discount in the accounting system. So instead of adding the discount to the order, the customer service team decided the best course of action would be to reduce the prices on all the line items by 5%. So again, we sent an EDI invoice back to the retailer, and the retailer automated system happily paid the reduced price for all the items, but then it deducted an additional 5% for the expected discount. And this continued to go on again and again for 9 months before we detected the issue. And so what did this cost the supplier? Well, effectively, instead of giving the retailer a 10% or a 5% discount on all the purchase orders, they gave the retailer a 10%. So it was an additional 5% of all the revenue with that customer over a 9-month period. And it would have continued had we not gone back and looked at the data and found this particular issue. Our next story is late shipments. And in this instance, this was another client of ours, and the retailer was actually picking up the goods at the supplier's distribution center each week. Unfortunately, the retailer was typically late to pick up those shipments. So if they called for a pickup on Monday, the retailer tended not to show up until Wednesday. So the supplier really didn't mind because it gave the shipping team an extra couple of days to fulfill these orders. But what the shipping team didn't know was that each late shipment was costing the business $250 in a chargeback, and it hurt their vendor scorecard. Accounting wasn't sharing the fact that any feedback on chargebacks and deductions, and so the shipping team had no idea that this was causing an issue. The accounting team simply considered it a cost of doing business. But once the issue was identified, it was quickly corrected. All it took was calling up the retailer and complaining about the late pickups, and the retailer immediately corrected the issue. But unfortunately, the retailer, the only way they found out about this particular problem was that the scorecard came out and was given to the salesperson, and it showed that they were very late on shipping all of their orders, to a point where it became a bit of an issue. When the supplier recognized that it was in fact the retailer's fault, the retailer wasn't willing to refund the chargebacks because it took the supplier so long to identify the problem. So at the end of the day, it cost the retailer or the supplier $20,000 and actually caused some relationship friction between the two businesses. Our next story and last story actually happened to me personally. We were a small retailer, or supplier, to a major retailer. It was our largest account. And the retailer kept reporting large shortages every time they received our goods. And to a point where we actually thought our shipping team was doing a poor job of shipping out the orders. Now, they were our biggest orders, but they, you know, every single order we shipped out had some sort of shortage associated with it. So we forced our shipping team to break down every shipment before it went out the door and double count it to ensure that we were actually shipping properly. So we began doing that, and still shortages did not reduce at all. It got so bad that our shipping department was actually taking photographs of every shipment right before it went out the door, just to prove to all of us in the business that they were doing a good job. So finally, our team came together. We had formed a team to kind of deal with this issue, and we decided the best course of action would be to schedule a visit at the retailer's distribution center to see how they were receiving our goods. The retailer was happy to let us do that, and they actually scheduled it right when our shipment was arriving so we could watch them process our shipment. And it was amazing what we saw. We expected to see a large conveyor system with scanners in the sky that would scan every box as it went by, but instead what we found is a very manual receiving process where a person received a pallet and they had to go through and count each item by hand to receive. Well, very quickly we realized the receiver was not counting correctly. Many of our boxes were the exact same size with different items. So it was very difficult for folks to count the quantities correctly if they weren't expecting the same items in different boxes. So what was happening was they would count, we would ship 10 boxes of part number 1, 2, 3, and they would count 15 boxes of part number 1, 2, 3. We would ship 5 boxes of 4, 5, 6, and they would count 3 boxes of 4, 5, 6, and it would go on and on and on. So we came back as a team, and we started talking about possible options, and we came up with a color coding system. So every box, every different item that was in the same size box had a different color label put on it. So part number 1, 2, 3 might have all blue labels. Part number 4, 5, 6 had all red labels. And not only did it make it easier for our folks picking the shipments, but very quickly, once we rolled out this change, we noticed the shortages went down dramatically. We also found out that the retailer would only pay, would not pay for overages. They would only deduct for shortages. So that was part of the issue that we were dealing with. But once we rolled out the color-coded labels, our shortages dropped by over 80%. It was so successful, it saved us $250,000 per year just with this particular retailer. But we immediately rolled out the program to all of our retailers that we were doing business with to help them as well. And actually, this became this change was so good for our business. There was more hidden cost besides just the shortages. Our inventory became much, much more accurate with the retailer, and so much so that they actually made a case study about us to present to other suppliers in the business. So this was a huge success, saved the business quite a bit of money, and made our supply chain far more efficient. Okay, so here's some questions that I like to ask to find out how businesses view chargebacks and deductions. So immediately, the first thing I ask is, does your organization have a deduction threshold? And how much is it? And the reason I ask this question is, the higher this number is, then the more deductions I know this business has over time. And so some businesses have it set at $50, some $75, but I've seen it much, much higher than that at various businesses. And so I don't mind businesses having deduction thresholds, but I want to make sure that they're reporting all the deductions to a team of individuals so that they can be managed. The other question I like to ask is, do you think retailers are playing games with deductions? And I've heard many stories over time that some retailers consider chargebacks and deductions a profit center. And while that might be true for a very small number of retailers, I think the vast majority really see chargebacks and deductions as a way of getting the supplier to comply and make the supply chain more efficient. Do you consider chargebacks just a cost of doing business? This question, I really believe that they're trying to make the supply chain more efficient, and as more and more vendors consider chargebacks as a cost of doing business, they're going to have to do something else to make suppliers comply. So I've actually talked to some folks in the retail industry, and they're considering increasing the amounts of chargebacks because too many companies just consider it a cost of doing business at this time. How do you report your chargebacks and deductions? And do you understand why you're being assessed a particular fine? Too many companies don't understand why they're being charged back. And if you don't understand why that's happening, then there's no way for you to correct the issue. So how can we find these lost dollars? Well, I think the most important thing that you need to do is measure your deductions by customer and by type. So what do I mean? Every time you have to write off money from a customer, it needs to be reported on. And you need to assign a deduction name to each of these so that people can understand that either shortages are your biggest error or missing ASNs are your biggest error, so that they can actually tackle those issues. I think it's extremely important to develop a team from accounting, IT, fulfillment, and customer service that can come together periodically to review the chargebacks and to take action on the ones that they can solve quickly and easily, and the largest ones. Implement tools to catch issues before they reach the accounting department. I've seen businesses do this in a variety of ways. Sometimes it's a script that runs that sends out notifications. Other times it's a report that comes out at the end of the day. Obviously, the sooner you catch an issue, the better, so that it doesn't ultimately reach the accounting department in a chargeback fine or deduction. And always, always, always verify the paper invoice matches the EDI invoice. Too many times I've seen people have issues where what they think is going out on the invoice doesn't actually match your paper copy of that invoice. So One EDI Source takes this so seriously that we developed a tool that actually helps people catch these types of issues. And we made it universal, so it clips onto any third-party EDI translator. So you might have Gentran, you might have EDI HQ, our translator, but we've made it universal so that you can get the benefit out of it very quickly. And it immediately summarizes the issues that are happening in your EDI exchange so that you can take action and reduce mistakes and research time. And the nice thing about this tool is it's not like implementing an EDI software solution. It can be deployed in a day, and we don't need any additional hardware. It's in the cloud, and no IT resources are necessary. So One EDI Source is here to help. We've been in business for over 25 years. We've seen almost any issue you can imagine happening in the retail world especially. And feel free to give us a call, contact someone in our team and ask any question you have. And you can download some of these guides if you're a new user and you're just trying to understand what is EDI. We can do that. We can help you there as well. We have some upcoming webinars that you might be interested in. In April, we're going to have an EDI crash course for the non-EDI manager. So that'll help you dive deeper into some of the topics we were talking about today. As well as in May, we're going to really go through and help companies take the next step to becoming operationally excellent. So thanks for joining our webinar. We're going to do a quick demonstration of our Intelligent Exchange product. So if you're interested, please stick around and we'll take a peek at that. Thanks, everyone. Okay. For everyone that's stuck around, thank you very much. We're going to show you Intelligent Exchange now. So as you can see, it's a web-based tool. So it doesn't require any hardware or software on your part in your data centers. We host the whole thing for you. So I'm just going to get logged in and we'll take a peek. So we built Intelligent Exchange basically for two groups of people. The strategic user, who might be the director of finance, the head of customer service, the operations manager, to be able to summarize issues that are happening in their B2B exchange very quickly and easy so that they can focus on improving their supply chain as quickly as possible. We also designed it for the folks that are in accounting who need to look up transactions in your EDI system and understand what may have happened if there is a deduction or a fine. Or maybe the customer service team needs to look up a new order to see what items and prices and quantity that the customer wanted to buy. So we'll give you a quick demonstration on those features. So let's start with the strategic user. When you first log into the dashboard, if I'm the director of finance and I want to understand who I'm having the most issues with, very quickly I can see that all my partners here on the left, the alerts that have been generated for those partners over the last 30 days, and the number of conversations that have been impacted. And a conversation is just a complete order cycle. So if you imagine a purchase order, an ASN, and an invoice is one cycle. So we have 294 cycles for Home Depot. And then we capture the value of those conversations to help you understand the impact that these alerts represent. So in this case, $770,000 worth of orders for Home Depot. So now, if I'm Director of Finance and I want to understand why I'm having a problem with Home Depot, I can simply click on the link, and it will summarize for me the different alert types that we've detected. So you'll notice that for those conversations, 184 of them, we sent the ASN late. So very quickly, I can understand that I'm not shipping out on time for my to my retailer based on the data that's inside the original purchase order. We're also having some additional issues. We're sending our invoices late, and in some cases, we're not sending an invoice at all. We've had some rejected transactions, and by knowing this, we can quickly determine they're probably not going to pay for transactions that they reject, as well as some invoice out of balance issues. So if I go back to the dashboard, and maybe now instead of looking at it by my various partners, I want to look at it by alert type. So now the system will summarize for me across all my trading partners the issues that are happening the most often. And I can quickly dig into these and get more detail if I need to. So if I want to know where I'm missing invoices from, I can click on that alert type, and it's going to now summarize for me the different partners that I have problems with. So again, I can focus very quickly, maybe eliminate the issue with Walmart, AutoZone, and Home Depot, and take care of a large number of problems very, very fast. So now, if I'm a more tactical user, like say someone from the customer service department, I can use Intelligent Exchange to look up orders inside of the system. So I can simply type in a purchase order number and now hit search. And the system will then show me the purchase order. But not only the purchase order, it's going to show me every related transaction to this particular conversation. So you can see that we received the original order from Walmart on January 11th at about 1 p.m. We then sent an order to our third-party logistics provider, and that's using a 940 transaction or a warehouse shipping order the same day. A couple of days later, they sent back a notification that the order had shipped. And then shortly after that, we sent back an ASN, and then the next day we sent back an invoice. So you can imagine a customer service agent can very quickly understand exactly what happened with this particular transaction. But if they have more questions and they want to see something, they can simply click on the order, and it will bring up what we call document view. And document view allows you to see the order in an easy-to-read method. So instead of seeing all the codes that happen on an EDI document, we convert all those codes to something that's easy to read and review. If you're a savvy EDI user and you know how to read EDI documents, no problem. Click on Source View, and it's going to show you the actual EDI document in its normal format. So now, if I'm, let's say, someone from the accounting team and I want to look up a particular invoice, I can simply select an invoice and then type in the invoice number. And when I hit search, it's going to find, again, that conversation. In this case, it's with Oracle. And this is something that the accounting team typically never had before. So again, they can see the invoice, but they can also see the original purchase order if they like, and they can also see that we sent a second invoice shortly after the first one. So we must have split shipped this particular order. But more importantly, notice we have an alert. So if I click on the alert, I can see it's telling me that there's an invoice price to purchase order price mismatch. So I can very quickly see that we tried to charge the customer $2,000 per unit for this particular item, but the customer on the original purchase order only expected to pay $20 for the item. So at the end of the day, this was a $24,000 mistake potentially made by the customer service team or the person that owns the pricing. And So now when the accounting person wants to know why did this customer short pay this invoice, they can quickly understand that, oh, there might have been a pricing issue. Let me go work with the team that deals with pricing to see what's going on. And in the past, this would have just turned into a debit memo back to the customer saying, hey, you paid us short for this invoice, and become a nightmare back and forth trying to understand what might have happened in this particular issue. So IX allows you to quickly get to the bottom of these types of issues and help you stop issues from happening in the first place. The other thing that is nice is we can share conversations. So we can, if you want to communicate with your retailer about a particular order, maybe you received a deduction that you don't believe is valid, you can send out an encrypted link to that retailer, and they'll only be able to see this one conversation that you chose to share with them. If they decide to add notes to the conversation, you will be alerted as soon as they do that. And it's a very easy way to get on the same page with your retailer. So IX can do a lot more, so we encourage you to reach out if you'd like to learn more about the product. This concludes the demonstration from One EDI Source, and thanks so much for attending.